What's going on YouTube? It's your boy Tryhard back at it again with another video. I know it's been a while since we made a video, but we are back officially this time, so expect a lot of videos. I'm just gonna record videos pre-handed and make sure I have enough videos to put out for you guys. And so for today's video, we're gonna do a quick one. I'm gonna try to do it under 10 minutes. So a lot of people always ask me, what is your trading plan, or how do I make a trading plan? So right now I am going to help you guys make a trading plan in under 10 minutes for forex trading. Now I'm gonna go over the key points that I think you should have in your trading plan, and then how you should more or less adjust it to yours and see how it could help you, or how you can make your own brand new one. So we'll do that right now. We'll jump into the next scene and let's get started. Guys, you know we can't start the video without a plug. So guys, of course, you already know my Tryhard Trading mentorship and signal group will be in the link in the description down below. If you guys want to join me, I'm also live streaming every morning, Monday through Friday, 8:30 on YouTube. But if you guys want to have a little more one-on-one session with me, you guys want to text me, you could just sign up for the mentorship that I'll leave in the description, and then I'll help you guys out there. I'll give you my signals of the trades that I'm exactly taking. Some of the trades that we go over here on YouTube are from those signals groups. So guys, I'll leave that in the description down below. Follow me on Twitter and Instagram. You guys already know all of this. Every video is going to be the same thing. And let's get into the video. All right, guys, we're on step number 1 of your trading plan. Now, the first thing to your first trading plan is describing what type of trader you are. Not everybody is the same type of trader. Not everybody's the same person. So nonetheless, you don't trade the same. So right now I have the 4 most common styles of trading. And then from there, you need to choose what you are and put that down in your trading plan. So first things first, scalping, you're a short-term trader. You're only in there for a couple minutes. Day trading, you're still kind of short-term, 1 day max. You don't hold positions till the next session, the next day. Swing trading, short, medium term, several days, sometimes weeks. And a position trader, which is long-term, weeks, months, and years. Now, me personally, I am a day trader, so I hold my positions for the day. If that, maybe like an hour, 30 minutes, and hours. I know we call it scalping because, you know, you're usually in quick and out, but scalping is more like on the 1 minute charts. You're just in and out. You're jumping in and out every minute, you know, stuff like that. Day trading is more like 30 minutes, an hour. I'll hold my position for like 2-3 hours if I have to. Sometimes if they're good, the trade goes right my way, then I'll only be in there for a couple minutes. So technically I am a day trader. Scalping and day trading is where more than likely I see 90% of traders are. The other 10%, you might get a couple swing traders. I personally have only met 1 or 2 position traders, but swing traders, even then, too, are pretty low in numbers. Most people are just day traders and scalpers. So you just decide what you are, write it down, and then we'll move on to the next step. All right, guys, we're moving along this. So second thing you should have for your trading plan, now that you know what type of trader you are, you know if you're a scalper, a day trader, swing trader, right? Now you need to know what you're trading. Now, this is it's up to you guys, whatever you want to trade. You could trade one of the 128 currency pairs that are listed, or you guys could trade indices, you know, the NASDAQ, US 30, SPX. So it's just honestly whatever you guys want to trade, whatever you see you're good at, whatever fits your time zone the best. Just most people are GJ traders, Euro USD traders. If not, they're on US 30, NAS. Me personally, I only trade NASDAQ, and now I'm adding on gold, but that's just about it. And I also recommend, guys, don't look at too many pairs at the same time. Don't be the person with 20 pairs on your list. Like, focus on 1 or 2 pairs, lock those in, and then if you want to add more after you have locked those in and you have a good focus on them, then you can add on more. But I wouldn't recommend trading all 128 pairs. No, I recommend grabbing 1 or 2 that you see you're really good at, that really fits your time zone and your type of trading, and then move on from there. Step number 3, guys. Now we're moving along this pretty quick, so you have to go back in the video, but we're doing it under 10 minutes. Now we know what type of trader we are, right? So we're gonna do mine. So I know I'm a scalper, right? Not a scalper, I mean I'm a day trader. See, you get confused. So now we know that I'm a day trader, right? Now I told you what I want to trade. I only trade NASDAQ and I only trade gold. Now I need to decide what time do I want to trade. As you see, there's 4 sessions: a Sydney, Tokyo, London, New York. Some people are getting confused by this, called the Asian session as well. Same thing. Now I used to trade London because I used to trade GJ. GJ is most volatile during London session because that's what it correlates with. New York has the most movement for NASDAQ and gold pairs, so that's why I'm trading that. Now I trade New York and I only trade NASDAQ and gold. Now, if I were to trade London, I'd recommend trading London and trading something like GJ. So correlate your pair with the time zone that you're trading and then make it work for you. And also another thing is, like, some people are not from the same part of the world, so time differences might make a difference. So in Europe, I know London is a different time than it is over here in the eastern coast of the United States. So guys, make it work for you. If you have a job and you work in the morning, you obviously can't trade none of this. So you might want to be able to trade Asian session right after you get off work, stuff like that. Or vice versa, if you live in the Europe and you can't trade New York, then you'll trade London. So look at the times. I have the times up here. So it's whatever fits your calendar, whatever fits your job, whatever fits whatever time you could trade. One more thing too, it'll be good to have this website down too. If you don't know what session you're in, for example, right here, let me refresh the page, and we're still in New York session. So it'll highlight green. So whatever time of the day it is, just put in whatever you are, refresh the page, and then it'll tell you what session you're in. So that way you can see exactly what session you're in. Alrighty, you guys. For example, I told you guys mine was already the New York session, and we trade gold and Nasdaq only. All right, guys, moving on to step number 4 now, risk management. Guys, this is one of the more important ones, and if you guys are not good with the numbers yet in trading, then I recommend you use something like this, a position size calculator, a lot size calculator, just to figure out whatever position you really want to use. So account currency, you put dollars, whatever your balance is, 100k, 200k, 500k, whatever you want to risk percentage wise, 1%, 2%, 0.1%, 0.5%, and then how big your stop loss is and what pair you're trading. You'll hit calculate, and it'll tell you exactly what type of lot size you should use. Now, I recommend learning it for yourself, but use the calculator in the beginning so you'll be 100% certain. But the longer you do it, then the numbers will just come into you easier, and then you could just look at the chart, 20 pips, 10 pips, and then you know exactly what you're risking. This is set from the beginning, depending on your account size. Determine what you're going to risk before you start trading. If you want to lose $500 per position, if you want to lose $1,000 per position, make sure you know that before you even start looking at the charts, right? And when you're looking at the charts, your stop loss will change, or if you want to keep the same stop loss, perfect. And then just make sure within that stop loss is what your account, what you're willing to risk. That's all you need to know. Risk the same amount every time, guys. You know, no matter if your stop loss is 50 points, no matter if your stop loss is 10 points, risk the same amount. For example, you're only losing 500 per trade, only lose 500 per trade every single time. Don't let it run for 1500. Don't let it run for 2500. If it's 500, it is 500. All right. So now just a little recap before we go into the next step. First, we have what type of trader we are. You have what pair you're trading, what session you're trading. Now we're going over our risk management, and now we'll move into the next step. Now, guys, what number are we on? We are on number 5, your trading strategy. Now, this is going to differ between all of you because everybody trades differently. This just comes down to whatever your trading strategy is. Remember, this is a trading plan, not a trading strategy video. So I'll make that one later, and I'll show you a real strategy. But for right now, you just need to decide, why are you getting into that trade? Are you doing a breakout trading? Are you doing a reversal trading? Supply and demand trading? Did it hit the fib level? Did it, whatever reason, an indicator that you told you to get into it, whatever the reason is, make sure that that's in your trading plan. Hey, it broke out of this area, it broke out on this time frame, it gave me this candle that gave me confirmation, and that's why I got in, type of things, stuff like that. So make sure you have that written down as well if you're a new trader. I know a lot of people say write it down, and nobody writes it down, but guys, write it down. Like, if you don't believe, guys, I have things written down on little sticky notes, and I still have them on my computer. And guys, I'm a profitable trader. I have plenty of accounts, and I still write it down. So guys, write it down, your trading strategy, and then let it correlate with your trading plan, okay? So just figure out what type of strategy you want, what you use, and then move on from there. Now we are on to step number 6, guys. I know we're moving fast, so if you have to go back, go back. Your exit plan will be number 6. So what I mean by exit plan is, like, for example, let's say you lose a trade, right? Are you getting into another trade for that session, or no? Are you done? Okay, let's say you lose that second trade again. Are you doing 2 losses and I'm out for the day, or what are you doing? This is stuff that you guys should know before you even start trading. For example, me, myself, I'll take 2 trades. If 2 losses, that means I'm out for the day, no matter how good the trade looks. Because I've seen examples where you think that trade is going to buy 100%, and guess what? It does not buy up, and you end up blowing the account because you keep trying to get into it. You keep trying to buy it, and it just does not end up going your way. Guys, nobody knows where the charts are going. Sometimes they'll, for no reason, perfect looking trade, all your confluences are in line, and it'll just still take you out. So guys, one of those things is just you got to have an exit plan, and don't break away from the exit plan. This is where discipline plays the next part. Now, if you lost a trade, okay, bomb. You know, you manage your risk. Like we said earlier, I lost $500, right? Bam, I'm good. I'm gonna wait a couple minutes. I'm not gonna jump right straight into it. I'm gonna wait a couple minutes, give it a little 30 minutes, let the markets play out. And then I'm jumping in again with a second position if I want to. I don't have to, but if I want to, that'll be it. So that's what I mean by exit plan. One more thing that I'm on to exit plan is, let's say you're in profit, right? Let's say you're up $1,000 on your trade, right? Now think about your exit plan as well. When are you gonna take TP? Are you sure you already have your TP set? Let's say it goes back down. Are you going to break even, or are you still going to hold your stop loss? Let's say it comes down to $500. Are you going to close because it came down 50%? So these are things that you should have in your trading plan already set beforehand, so you know what to do when the moment comes. For example, me, as soon as I'm 10 pips in profit, I'll break even. I'd rather take a break even than I'd rather take a stop loss hit. Sometimes you'll get stopped out at break even, and then it'll go hit your TP, and that's something that you have to be okay with. So guys, just make sure you have your exit plan written down as well. All right, guys, and the last step of your trading strategy, your trading plan, whatever you want to call it, is recording. You have to record your trades. Now there's two ways to record your trades. So you pay for something like this, which is called TradeZilla, and then it has a nice layout. You can record your trades, you can see how much you're winning, your graphs, your percentage, and what I like is the little calendar down here where you can mark whether you're up or down for the day, right? But nonetheless, you do not have to pay for this, guys. You can go on images, look for a little image, go on Microsoft Excel, and just track your records like that. I know on TradingView, you can take a screenshot of this and post it as a link on that Excel spreadsheet, and then you can come back to exactly what the charts look like. So record your trades, see what you're doing wrong, see what you're doing right, see what time. I say record it, but record it to the T. So record what time you took the trade, what time you got out the trade, why you took the trade, what confluences did it hit, why, you know, everything, how you were feeling when you took the trade, everything that you can about the trade. Because let's say at the end of the week or at the end of the month, you could go back, review your losses, and see if there's any patterns like, hey, you know, I lost this trade, I lost most of these trades at like 9:30. Now, you know, hey, if I'm losing most of my trades at 9:30, let me not trade 9:30 no more. So recording does help in that sense. Don't go, I'm not the type of trader that tells you go crazy with it. No, I mean, like, record your trades, but if you're not going to go over them, what's the point of recording, right? So if you're going to record it, make sure you review it at the end of the week, at the end of the month. Try to help yourself in any way you can. So like I said, guys, you could pay for one or you could get one for free, right? And that's for recording. All right, guys, so we're back on this page. I think we did it under 10 minutes. I'm gonna have a timer up here. Hopefully we did it under 10 minutes, but if not, I tried my best. So just a little review of everything because we went fast. Your trading plan, things you have to have on your trading plan, what type of trader you are, swing trader, scalper, day trader, all that, right? Confirm that before you start trading. What pair you want to trade, guys. Pick one or two, whatever pair you want. Mostly the most common ones are the best. Other than that, what session you're going to trade, London, New York, Asian session, relates to wherever you live, however you want to do it. If you're up at night, if you're up early in the morning, whatever you want to do, right? Pick that out before you start trading. The fourth thing, your risk management. Be ready. Know what you're going to risk per trade before you get into a trade. Keep it the same. Don't differentiate unless you're scaling up your account, right? If you're risking 500, you're risking 500. Don't let it run and then try to risk 1,000 because you think, no, 500, 500. Keep your discipline. The next thing is your trading strategy, and that's something that you should have in your trading plan. That's what you're going to follow when you get into those trades, right? Why did you take the trade? Was it a breakout? Was it a reversal? Did it hit a supply and demand level, a fib level, the indicator, whatever it is that your trading strategy tells you to do, have it down there, right? Last thing, the exit plan. Know when to get out of your trade, know when it hits TP. Don't try to hold. Are you gonna hold? Then are you gonna leave a runner? Stuff like that, you know. If you take 2 losses after a day, are you out? Stuff like that, right? Have that exit plan already set in stone. Follow your plan, and that's how you guys are gonna make it. And then I believe the last thing was recording. Like I told you guys, if you're gonna record, make sure you review. Don't just, there's no point of recording the trades if you're not gonna review it at the end of the day. You're not gonna follow that. So the whole reason of recording is to find a little pattern, see what times you're better at, see what pairs you're better at, and then update your trading plan from that. Okay, guys, I'm gonna leave a couple links up here for other videos that you guys can go back and watch, and be ready because we are dropping a lot of videos. I'm aiming for 2 videos a week for the rest of the year. So guys, make sure you like, comment, subscribe to help me out, and then we'll keep going from there. Thank you guys. See you.